Everyone, and welcome back to Forex Scope, your go-to channel for insightful Forex analysis. Today, we're diving deep into the AUDJPY pair, examining both the 15-minute and the 1-minute timeframes to uncover potential trading opportunities. If you're looking for clarity on where this pair might be heading next, you've come to the right place. Don't forget to hit that subscribe button and turn on notifications so you never miss an update from Forex Scope. Let's get started. This support zone is identified by a series of strong bearish candles exhibiting significant downward momentum, culminating in a sharp drop from a high of 100.634 to a low of 100.51. Following this significant price decline, the market attempted to consolidate and bounce back, but a subsequent bearish push pushed the price down to 100.474. The formation of lower lows during this period indicates a strong selling pressure that created a floor around the 99.500 to 99.622 area. The subsequent price action shows a struggle to break this level decisively, with multiple attempts to recover, suggesting that this price range acted as a significant psychological barrier and a potential area for buyers to step in, forming a clear support based on the sharp decline and subsequent consolidation, indicating accumulation before further potential moves. The presence of large bearish candles within this zone, coupled with the subsequent price hesitation, highlights its importance as a support level, reflecting the market's reaction to this lower price range. This resistance zone is identified by a period of choppy price action and consolidation between approximately 99.515 and 100.073. Within this broader range, a more defined resistance area emerges around 99.808 to 99.919. This zone is characterized by multiple bearish candles failing to decisively break above the upper boundary, followed by significant pullbacks. The price repeatedly tested this upper limit, indicating strong selling pressure from sellers who were willing to defend this price level. The presence of large upper wicks on several candles signifies that while buyers attempted to push the price higher, sellers overwhelmed them, pushing the price back down. The sideway movement and the repeated rejections at this price level suggest an accumulation of selling orders, making it a significant area of resistance. The range showcases a clear battle between buyers and sellers, with sellers ultimately dominating at this price threshold, establishing it as a strong resistance. The support zone is identified around 99.629 to 99.635, formed by multiple price rejections. Observing the data, we see a period of consolidation and several candles interacting with this price range. Specifically, between timestamp 176-228-2680, November 4, 2025, 1858, and 176-228-2860, November 4, 2025, 1901, the price tested this level multiple times, indicating buyers stepping in to defend it. The highest price within this observed period for this support zone was 99.64, and the lowest was 99.623. This repeated interaction suggests a significant area where buying pressure is strong enough to halt further downward movement. The presence of numerous wicks touching or closely approaching these price points underscores the importance of this support level as a potential floor for the asset's price, characterized by several touchbacks that solidified its role as a key area of interest. This resistance zone is identified between 99.673 and 99.685, marked by several instances of the price being rejected. Between timestamps 176-228-4000, November 4, 2025, 1920, and 176-228-4300, November 4, 2025, 1925, the price repeatedly approached this level but failed to break through convincingly. The highest price observed within this period for this resistance was 99.692, and the lowest was 99.666. This indicates a ceiling where selling pressure becomes dominant, preventing further upward progress. The consistent inability of the price to sustain itself above this range suggests a strong barrier. The data shows multiple candles testing this area with significant upper wicks, confirming the presence of sellers actively defending these higher price levels. This zone represents a significant hurdle for any bullish momentum. Observe the recent price action of AUDJPY on the 1-minute timeframe. We are currently trading around the 99.637 level, which has shown some support in the past. The Fibonacci retracement levels, with 99.575 as the starting point and 99.702 as the ending point, indicate a potential upward bias. The previous resistance at 99.685 and the current Fibonacci level of 99.702 suggest an initial target. However, the market is currently showing signs of consolidation and potential retracement. We can anticipate a move upwards towards the Fibonacci level of 99.702, followed by a possible pullback to test the 99.678 area, which aligns with previous price action. A stronger upward move could then target the 99.756 resistance, but expect further consolidation and potential retracement around 99.732 before a final push towards the higher 99.698 resistance and then a move towards the initial Fibonacci resistance of 99.702. The tick volume and Bollinger Bands suggest volatility, so expect fluctuations. The previous support at 99.629 and resistance at 99.673 from the 1-minute analysis also provide context for these potential price points. The overall sentiment, considering the Fibonacci sequence and recent price behavior, points towards a volatile upward movement with potential pullbacks, creating opportunities for traders to identify zigzag patterns. The lower Bollinger Band at 99.608 suggests a potential floor, while the upper band around 99.725 indicates potential resistance zones. The interplay between these levels and the established support/resistance zones will dictate the market's path.